Today is Thursday, August the 15th, and I think it was a very important day where the market is trying to communicate a message to the White House about how serious it takes this surge in bond buying, the inversion of the yield curve, and just generally the way the market feels about the tariffs and the state of the global economy. We've had 2 Mondays that have been shocking to the market. Today, we had a bit of a breather and certainly volatility, and we'll look at the VIX in a second, but I believe the market is trying to tell those in charge of the American economy that there is a lot of pain ahead, but it can be remedied if they take appropriate action. And it's going to take more than just the Fed lowering interest rates by 0.5 percentage point to fix this market. Because at this point, that would be a bailout of mistakes that the government is making in their trade wars, not only with China, but in trade wars with everybody. We are in a trade war with Canada, with Mexico, with Europe, with car manufacturers, with steel and aluminum makers. It's indiscriminate. Anyways, enough. Look at the volume in all 3 markets. Very good volume, very strong activity, buying and selling. Advancers and decliners were essentially flat, with decliners leading advancers by a tiny bit, which means that our market breadth indicator is probably not going to move much from this point. And we're starting to look like this, where we spent April, May, and June just sort of indecisive. And then we went into a long period of excited money moving into the market and a subsequent move up. But look at these peaks. This one, these 2, and this one. We've got here, 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 and now here and here. There's a good possibility for a movement in either direction, and it's really up to the White House now. So let's look and see what the technicals are telling us. Let's revisit those head and shoulders patterns that we've been tracing for a while now. This box shows you the left shoulder, this box is the right shoulder, and this is the head in between, and this is the neckline. That neckline proved to be support, then resistance, and then a launching pad. Shoulder, head, shoulder. Neckline was support, came back for a retest for more support, moved up, and now is resistance. We moved back down to this neckline and see that it's been support for 1, 2, 3, 4 days now out of the last 2 weeks. And so has 68.1%, which is the golden ratio of a set of Fibonacci's. So that's doubly important now. 68.1%, the golden ratio, has been near perfect place for bounce for those 3 days and absolutely perfect for 2 of these days. So the neckline and 68.1% pretty much coincide. If we break both of them, we're going down to the 200 SMA, which would be just under 2,800. It's anyone's guess as to which it's going to be. It's really going to be up to the White House. And what we heard leaked today is, of all Trump's economic advisors, the only people in the room who agreed with what Trump is doing and blaming it all on the Fed were himself and Navarro, which means his other economic advisors like Larry Kudlow and his committee disagree with the president, but of course won't come out and say as much. And when they talk, they only talk on CNN. They won't talk on Fox. Apple. I'm also going to talk about Walmart today. I said that in a tweet, okay? Apple down 83 cents, not very much, saved by the convergence, the perfect convergence here of the 50 SMA and the 50 EMA, where the SMA has just crossed a little bit over the EMA, but that's strong support. And we have a cloud that's moving up. So as the days goes by, the cloud will provide higher and higher potential support for Apple for technical traders. Caterpillar, sort of a hanging man doji today. I wouldn't read too much into that. Very low volume. Right there. That gap that we showed, well, here it is. The gap goes way back to July of 2017, so 2 years old, has been support and will likely be support if the market decides it's going to go down. GDX, I added 200 more shares of GDX because we stayed in this range and we moved up to the top of the range today. So that was a good sign for buying more GDX. There was also a headline saying that there's somebody out there that believes that gold is going up to 1,700 next year. So gold miners is a good place to be. Whirlpool, I rolled my 130 short calls for a fabulous profit. It was quite a risk to sell 130 calls when the stock was trading at 135, 137. But I'd already done that the week before and incurred a loss. So I rolled and now recouped my losses and made all of my losses again in profit. So ended up really lowering my cost on those shares and rolled into more 130 calls next week because I think the stock is going nowhere for a while, and now those are worth $2.69. So my break even would be 132.69 by the end of next week for Apple, and that's just below this 50% retrace where the top of this candle was. So I'm feeling good about that. Now we lost the Chiku span on the cloud today. Yesterday it was support. Today it was support for quite a while, and then it broke that. I'm going to just draw a line here, and let's look at that green line. Now let's look at the 5-minute in relation to that green line, and you can see that the Chiku span bounced around that green line, lost it, came down to test the green line, which was the cloud, of course, on the daily cloud, fell below it, came up to test it again, and then moved quite a bit below it. So we finished the day right here. That's going to continue. So this price here of 129.50 is going to continue to be important tomorrow, as the stock, if it tries to recover, is going to look for support on this flat cloud. So let's take a look at that. Now I want to turn the attention to Walmart, because I bought a call spread in Walmart. They had good earnings, but more important, if we're going into a recession or a tightening of the economy, or if there's any slipping in consumer sentiment, which seems to be the only positive thing going in the market right now, that will increase shoppers at Walmart. And I've talked to some of my friends lately about Walmart, and I was surprised at how many of them shop at Walmart for packaged goods, household goods, deodorants, but they don't buy their produce there, they don't buy their meat and milk there, but pretty much anything that's in a box or a can or that they apply to their body, they're going to Walmart to buy. And these are people that can afford to buy their meat and their fancy products and produce at Harris Teeter and Publix and more expensive stores. We were talking about Lidl and Aldi, and that how my wife and I like to shop there. And then people say, well, we shop at Walmart for those things. And that really surprised me. So I went into Walmart yesterday just to buy tennis balls, and all of the cashier lanes that were open had lineups of people with carts who were full. And there was a lineup for people to wait for the self-checkout, and there were 8 self-checkout terminals. So I went back and I looked at the stock, and I saw this huge candle today because of its earnings yesterday, and I decided that I was going to buy call spreads. I bought 10 September 115 calls, and I sold 10 September 117 calls for 70 cents. And as let me just look at that for you. I'll analyze that a bit more tomorrow and show you what my reward risk chart looks like. Actually, if you want to hold on for 1 second, I can do that right now. So let me just bring over TD Ameritrade and show you. So I'm going to go into an account that I can't do that. Sorry, I'll do it tomorrow, but I'll tell you right now that on that trade, my maximum loss is $700, but my maximum gain would be $1,300. So that's a 2-to-1 reward to risk ratio, and that was worth taking for me. If you have any questions on that, let me know in the comment sections, and I'll do a whole video just on a Walmart spread. Now, here's the technical chart that I wanted to tell you about. This is a weekly chart, and I did a Fibonacci extension. So we had all of this chatter for Walmart between $62 and $45, and it finally broke out of this channel area here. So I took this as a base because it worked for so many different points, and I took this as a high mark, and I said, what if this pullback is setting us up for another one of these runs? So I created what's called an expansion Fibonacci, which is based on 3 points. You move from here to here, and then you pull back and get your third point here, and it tells you what a similar move to this one would look like. And it would look like a return of 104.66. Well, we're already there. We're already there, and we're running past it. So this might indicate that 127.2%, or the next Fibonacci, it's a minor Fibonacci, would bring us to 117.81. I can draw other Fibonacci's, but this one was interesting because if you look at the predictability of it moving from here to 100%, this was where the 38.2% was, and look how it proved to be resistance. The next area of resistance was 50%. Now remember, this move here was predicted based on the previous move up and the wave down. So it's forward predicting. We found 61.8, the golden ratio. We moved up then to 78.6% and just blew through it that same week back in November. So that was also an earnings week. We had a pullback into the area below the golden ratio and above the 50%. Then we moved back up to 78.6, and that proved to be a busy area for support. Then we came back down and found support at the 68.1. But we hit the 100% 1, 2, almost 3, and 4 times. And now we've come back this week to find support at the 104.66 or the 100% line. So I do believe that we are going to move to up to 117.81. We could do some time Fibonacci's and take a look at when we think that's going to happen. We could do some Elliott waves, and I'm going to work on that a little bit tomorrow, but I believe that's where we're going. And I'm not looking for my full 1,300, but once I get 50% of that call spread, I'm out, and I'll take my profit of $700.